Inheritance tax is a tax that affects about 4% of individuals and families. It is a tax on death, so it's on estates. It's typically 40% of the amount that's over the available thresholds. So each individual has a nil rate ban for inheritance tax of £325,000. The government has also recently introduced an additional nil rate ban which is linked to the main residence, and that is currently £125,000 per person, but is going up to £175,000 by the tax year 2021. So putting that into perspective, a couple, married couple, civil partnership, they would normally have a combined an amount that can be passed on free of inheritance tax of up to £900,000 in the current tax year, going up to £1 million by 2021. Inheritance tax is likely to affect anyone, therefore, who's got an estate of over currently £900,000 or £1 million for a married couple. It's likely, obviously, with property prices as they are, that will affect a high number of individuals. I say you're never too young to plan for inheritance tax, although obviously it's something that generally clients focus on more as they get older and can become more pertinent in their later years when their life expectancy obviously is decreasing. All clients can plan for inheritance tax in some form. Often that can be just doing putting simple strategies in place to ensure that you're not making a problem worse. So, for instance, a classic example is we have often see clients, individuals, where they are looking to buy second properties, possibly to rent out, thinking obviously that provide them with a good income stream throughout their retirement. It will obviously provide them with that income stream in retirement, but the property will also form part of their taxable estate. So what happens then is obviously their estate is of a higher value and it's causing an inheritance tax problem potentially later down the line. If those clients, instead of potentially funding additional properties, looked at further funding their pensions, then pensions sit outside of your estate for inheritance tax. So actually, in some cases, they can be passed on to beneficiaries completely free of tax. And rather than making a problem worse, actually you've created an income stream for the future that is more tax efficient. So for people who have a problem with inheritance tax, there are a number of strategies that they can look to use. The first thing I always say to people is make sure your will is up to date, make sure that it actually meets your objectives, and that's something obviously we would normally work with a qualified solicitor or other individual to put in place for you. The second thing is obviously, depending on time of life, making outright gifts to beneficiaries, to family members, can be quite difficult. You may think, actually, I'd like to make a gift to my daughters, my children, help them potentially get on the property ladder, but you don't know how much capital can you afford to give away, how much income and access are you likely to need in later years. So outright gifts, whilst they are very useful and can obviously mitigate inheritance tax after 7 years, can be quite scary for clients to contemplate. There are other solutions that are sort of softer solutions. So again, I mentioned pensions earlier on in the video. Pensions are always a good option. If a client holds wealth within a pension, that can be passed down to their beneficiaries, completely free of inheritance tax in some cases, depending on the age. And also they can pass to beneficiaries straight away on death. So there's no need to wait for probate, which again can speed up access, particularly at a time when the beneficiaries could be in a quite vulnerable position. So those are the two things I would always suggest that clients consider. There's also various allowances that they can make use of, annual gift allowances, gifting out of regular expenditure. They can sometimes be small amounts, sometimes be large amounts, but again it can assist with the part of the overall plan. Clients, when they think of inheritance tax planning, sometimes immediately jump to trusts. They're a very complicated area of inheritance tax planning, and again you'd need to seek specialist advice if considering a trust at any stage. They have their uses, but again, they're not suitable for every client. And that's the one thing I will say. There are a number of inheritance tax solutions out there, and often putting a plan together for a client would consist of many of those solutions. There's unlikely to be one solution that's suitable for them in entirety, and it could be that they need to take into account a range of different options. Likewise, different clients will need different solutions. So again, there's not one size fits all when it comes to inheritance tax planning. Fiducia can help because we have a number of highly qualified individuals who can put together a plan for a client, meeting their bespoke needs in every circumstance.